Fesco. Fesco is a fully Jamaican-owned fuel distribution and marketing company. Now, it's a particularly exciting stock for me because I am just so proudly Jamaican. I love to see when companies embrace our Jamaican heritage and like just push for who we are as Jamaican and represent well. So I'm particularly excited to join Jermaine today
Yes, I'm not alone today.
for this stock review and analysis. So we're gonna jump right into it after this.
Yeah, so if this is your first time here, welcome. So the format that we normally take, well, as Renee said, today we're gonna go through Fesco. And before we get into it, we just wanted to share a little bit about who we are as a community, just in case you've never been here before. So we're a Bible-based investment community focused on promoting financial literacy and education. We are founded on Deuteronomy 8:18, which says, "Remember the Lord your God, for it is He who gives you the ability to produce wealth." So that is our foundation, that is our rock, and we think about investing through the lens of our faith.
And with that, we'd just like to open with a quick word of prayer.
Yeah.
So, Lord, we give you all glory, honor, and praise. We thank you for this evening and we thank you for this community, Lord. As we go into this stock review today, we pray that your spirit of peace will be upon us, Lord, and that your discernment will be with us. I pray in the name of Jesus that your hand of blessing will continue to be upon this community. In Jesus' name, amen.
Amen. All right, so this is the format that our stock reviews normally take. We just speak a little bit about the company, to give you an understanding of what the company is about, because that's extremely important before you invest in any company at all. Next, we're going to look at, since Fesco is newly listed, we're going to just cover some highlights from the prospectus, just enough for you to understand enough about what the company does, its structure, how it makes money, how it operates within the industry, etc. We're going to look at the quarterly financials. Now, the 6-month financials were released at like 12 a.m. this morning. So I, quickly got it into our Excel file, and we're going to be able to see what the numbers look like.
And that's why templates are good, guys.
Yes,
You can just
yes.
plug in numbers and
yes.
you get the result.
Yeah.
Sidebar.
And then we're gonna, look at the price history on the Jamaica Stock Exchange's website, and then we're gonna talk about some news and some just what we think is coming up for the company and just our thoughts on the company as a whole. All right. So before we go any further, we have to say this: that the information shared here is for discussion, education, entertainment, and illustrative purposes only. We're not financial advisors, and so we cannot give financial advice. So this is purely for your entertainment. If you wish to, purchase this company, then speak to a licensed financial advisor. All right?
Absolutely.
Okay.
So, Fesco was incorporated and registered in 2013, and they unveiled their first branded location in Mandeville in 2014, right? So they started fuel sales from that time, 2013, 2014. And in 2020, December 2020 is when they now amended their registration to say, hey, we want to be publicly listed. So they wanted to now go on the stock market and do that IPO, initial public offering, to raise capital in order to expand their brand.
And we'll talk a little bit about how they used that capital a little bit later.
Right, which is why the quarterly statements are important, right? It helps us to keep track of what they're doing. Are they actually doing what they said they would do in their IPO?
Yeah.
Right. As I said before, Fesco is a Jamaican-owned fuel distribution company, right? And so they're licensed and operating in Jamaica. They've also made it publicly known that they reinvest in Jamaica. So the profits that are made are reinvested into our own nation, right?
Yeah.
They're not going offshore with our funds, with the funds, and that is something.
I know that means a lot to you.
Exactly,
Yeah.
it means a lot to me, because as persons who are interested, who have a vested interest in the growth of our nation, that must be important. Money staying here is important because we need it,
Yeah.
right? So just wanted to go through a few of the ways or the structures that are possible for these Fesco locations, and this was disclosed in their prospectus as well, right? All that we're showing you now is from their prospectus. So there are dealer owned, dealer operated entities, right? Which means that it's basically a franchise. So this is something that is worth noting for persons who may be interested in opening a petrol station. You can own a Fesco location,
Yeah.
depending on the size of the investment. So it's not necessarily only the stock that you can invest in, but you can invest as a distributor,
Yeah.
right? As a dealer, I mean, sorry. So you can own and operate. The other one is company invested, dealer operated, which means that Fesco partners with the dealer to purchase or to secure the physical location, but the dealer is the one who does the day-to-day, who runs the location. And Fesco currently has 4 of those, while they have 10 of the dealer-owned, dealer-operated. And they're really optimized for the dealer-owned, dealer-operated, according to what they've stated, right? There's also company-owned, company-operated, which means that Fesco themselves, they own the location and they're the ones responsible for the day-to-day management of the location. And the Beechwood location, which was recently opened, soft open,
Yeah.
soft launch in what, October, November?
Yeah.
Recently. Recently, that location is their first company-owned, company-operated location. So that is pretty significant, and I know that persons would have had experiences at Beechwood already and have reported back that the Beechwood location, the fuel cost is
Yeah.
A1.
Yeah.
Like
I'm waiting. We've been to the Mandela location, but we haven't
Yes.
been to the Beechwood one as yet.
Yeah, like you want to buy gas from Fesco. you know what I mean? I definitely was pleased when we went to the ferry location.
Yeah.
And I saw those prices. I was like, what? Yes. So they
Focus.
yes, sorry. So yes, so they are maintaining what they have said about giving us value, right? And then there's also the company invested, company operated, which means that Fesco would invest in conjunction with a third party, but Fesco would operate it. And there are currently no such locations available or in play, right? So they shared also their 3 main goals. They, as I said before, they want to give us, the motoring public, they want to give us a superior retail experience, right? Fuel retail experience where value and convenience matter. They also want to provide dealer-owned, dealer-operated service stations with superior, which means more efficient, more responsive fuel distributor and marketer. And remember that Fesco is registered as a distributor and marketer, right? So they're talking about themselves here when they say a more efficient system. And thirdly, they want to provide above average returns for their shareholders as measured by return on invested capital. And for those persons who do own the Fesco stock, again, you can attest to
very
that.
happy right now.
Right?
Yeah.
You can attest to that. Especially if you bought it at IPO, you know that you're getting value for your investment, right? So they go on and they share a little bit about their directors and their shareholders who have 40 years of experience in the industry, in different areas of the industry, whether owning the service stations, the haulage contractors, the LPG plants, marketers, etc. So they have the competence to truly compete in a significant way with the existing market, right? Even with the multinationals who are here in Jamaica. So they share some more about what they intend to do, but they also indicate that though their primary market is retail fuel, they also will be marketing their own brand of lubricants, coolants, chemicals, and even drinking water, right? So they're diversifying a little bit outside of just being a gas station. They're also providing convenience stores, and they're also providing vehicle maintenance, fuel, lubricants.
And this is something that we see at times with certain gas stations where they'll offer their own products. I mean, that just pretty much improves your margin because you're able to make more on each product if you own the product.
Exactly, which is why they're able to give us such good value for even the fuel, because they're also licensed as importers of fuel, right? So this map again is taken from their IPO, their prospectus, which shares what their current locations are. And as you see, there is a heavy concentration in St. Catherine, and then St. Andrew, and then they're kind of across the island otherwise.
So I know that when I saw this, I looked at this map and I saw, I know they listed the locations that they have, but what I saw were opportunities for locations or spaces that they could have in the future. Right. So I was very encouraged by this to see that there is potential for growth.
Yeah, and that's significant because again, as I stated earlier, if you are interested in investing in a service station, you can look at this map and say, okay, which location is not yet served? You can also look at, of course, the competitors' maps and say, all right, which areas may be underserved, and you have a business plan at the tip of your fingers.
And I also, thought about the opportunity for them to maybe purchase or take over gas stations that aren't doing as well. Maybe they rebrand it, implement their own systems, and then that could turn that location around. So you never know.
Correct. All right, and then they shared a little bit about the market share, right? They have a pretty small market share in comparison right now. I believe, if I remember correctly, their market share was about 5% of the market for
a little bit less than 5, I think,
for Q1 2021. And they're saying, okay, here's why. Our market share is this small because we're new, relatively new, just operating over 6 years. Well, it's more now, 7 years. And they wanted to grow organically. They didn't want to buy out companies. They didn't want to have these acquisitions. But initially, they wanted to grow organically, right? That's.
But who's to say that strategy may change down the line, right?
It may. And then they also spoke about the fact that they didn't have much presence in Kingston and St. Andrew. And they know that the heavy traffic areas are in Kingston and St. Andrew are heavy traffic areas, and it would be helpful for them to have locations in those areas. And clearly now they do. Now they do. They have a location at Ferry and they have a location at Beechwood. So they are growing, and we can be sure that their market share is going to grow, not only because of them having more locations, but also as a result of them having good quality service, and good product, and more locations equals greater market share, right? Yeah. And they have excellent marketing, clearly, right? And the third thing is that multinational brands both in the industrial and commercial space are heavy competition. So the Texacos, the Shells, etc. Those are the multinationals.
Yeah, and we'll get to a graph later on which shows the exact numbers.
Right. So they market the transportation fuels, right? That's our motor gas. The E10, 87 and 90, right? The ultra low sulfur diesel, the regular diesel, LNG, which they intend to roll out. And we mentioned before the lubricants, coolants, and chemicals. Yes, David, new location. And they also have the drinking water and LPG, which they're planning to go into, and LNG for transportation, as we had mentioned before. So those are things to come. So they have plans for growth. And the other thing that is of note is that they have built a foundation and an infrastructure that can facilitate scaling. So
Yeah.
then they do go on in the prospectus to tell you what they intend to use the money to do, right? And that is, one, to enter the LPG market, the cooking gas market. They want to increase their presence in Kingston and St. Andrew. They want to start retail LNG for the transportation industry. So they specified at ferry, right? Haven't seen it yet, but someone, if anyone knows if it's out there now, since we've been there,
Yeah.
you can let us know. But when we went, it wasn't there yet. And then they also want to reduce the company's debt. So they want to eliminate the directors' loans to the company, and that is something significant because, again, it speaks to their own belief in the product and in the company, that the directors themselves would have loaned the company money to operate. So that is significant, and for me, that tells you their level of belief. So yes, Georgia, we know it's open, but what we're checking is if LNG is now available there. It wasn't when we went.
Yeah.
And then the two last things were that they also want to use the capital for general corporate purposes, right? Now, operating expenses, capital expenditure, that's just normal business. Yeah, you have overheads. So
And then the final one is just really with every IPO or public offer, there will be costs and fees that you need to pay to JSC, to the lead broker, etc. So they're just saying that they plan to cover the expenses related to the offer with the funds that they receive.
Right. And then these are just two graphs to show what we were talking about in terms of the market share. And the Fesco here, and this was as at September 2020, had 4.65% market share. And in terms of number of gas stations, service stations, as at September 2020, they had 4.4 market share. But we know that this has increased since then.
I think the prospectus said their aim is to get to 7% by the end of this year.
Right.
I'll try to confirm that, but yeah, I think that's what it said.
Right.
Yeah, it's here.
It is. Yeah. Yeah. So this is what we're talking about, right? So their aim is 7% market share, and that is with the expectation that ferry and beachwood stations would become fully operational in 2021.
Yes.
Now we know that they're both open, but they're not fully open. They're not fully launched. So the convenience store side is not yet open. We also know that Beachwood has a partnership with Mr. Breakfast, which will allow persons, or will facilitate food, and that's a big thing. Mr. Breakfast has a good reputation in terms of the quality of food and the taste of the food, etc. So that is a beautiful partnership between Mr. Breakfast and Fesco for the motoring public and even the walking public, because if you're walking near Beachwood and you're hungry,
Yeah.
so that is pretty much the background of Fesco, where they're coming from, where they are now, and what it is that they're expecting to do, or what they were expecting to do as at the time of the prospectus.
Yeah. So I'll just say, as it relates to their numbers in terms of market share, we can wait for the annual report for this year. Chances are they'll give us an update on those numbers, and we can see where they are. All right, let's see what's next. All right, so this what you're seeing on screen is just some of the details from the IPO. Now, I'm not going to spend a lot of time here because we wanted to get through the 6-month financials, want to look at the price history, etc. So I'm just going to go through this quickly. So this is the information about the amount of this is the state of the company's shares as at the date of the prospectus. 200 million shares were being sold by directors. We're going to share that next. And, the maximum number of shares to be issued by the company was 300 million. All right. So these were the different pools. So with an IPO, you have usually different pools. Some are reserved for either key partners or stakeholders.
Right.
Usually you have a broker reserve and, employee reserve shares, etc. And these pools are just to ensure that certain stakeholders get the shares that they would want. Because if you left it just to the public, they may not get the amount that they're looking for.
Mm-hmm.
And then it shows the total in consideration there. And yeah, this is just the amount that they were planning to raise. All right. And these were the directors. These 6 directors gave a total of 200 million shares, as we said before, and then the remaining 300 million came from the company, and each share was going for a price of 80 cents per share. Right. So if you're a dividend investor, you'll know that you'd be interested in this. So what they're saying is they plan to use 25% of net profits. So what you'd be looking for at the end of the financial year, look at that net income figure or net profit figure, divide by 25%, and then divide that number by the number of shares outstanding, and that's a potential dividend that you could look for from this company. Of course, that's dependent on whether or not they may want to use those funds to do something else. But if they were to pay a dividend, their current policy is to pay 25%.
25%, which is pretty awesome.
Yeah. So in the prior years to this, they have not paid a dividend. They've instead reinvested that money.
Yeah, and it's important to know that prior to this, they weren't in the public market.
Yeah.
Right. So the dividends that they would have been referring to are directors' dividends. So the directors were not taking dividends as payouts for themselves. They were reinvesting that into the company.
Yeah. Which we don't mind.
I mean, as I said, I think it's a great testament to their belief in the company.
Yeah, agreed.
Yeah. So
all right. So I'm going to be bringing up the
website.
Yeah, I wanted to look at their website for a second. So let me just share again.
Because guys, we're showing you this because we're showing you that the information is available. It may be available in different forms and in different places, but information is available about the companies that we're interested in. And when I say we, I mean
as in
generally,
we as investors. Yeah.
Yes, that investors may be interested in. So you can use the resources that are at your disposal to inform your decision, right?
Yeah, fully agreed. All right, so let us go back here. So this is their website, fescoja.com. So we spoke about most of what you'd see on the first few pages. I'd recommend that you go through it yourself, familiarize yourself with the content. As an investor, you may want to focus on the investor information section.
Mm-hmm.
So let me zoom in here a little bit so you can see it better. So usually for a company that I'm interested in, I'll bookmark the site, and you could set, for example, an RSS feed to notify you when information is released, right? So it shows you, information about products and services. I'm going to go to the news section. This video, I recommend that you watch it. It seemed to be pre-IPO,
Yeah.
but it still helps you. It just gives you some background on the company, about us. It would share their structure, details, and just good information to know. All right.
Right. So you know what you're buying into. If it is that you're buying the stock, you know what you're buying.
Yeah.
You know who the directors are, and if you so desire, you can go and explore and find out more about these directors. Do you believe that they're trustworthy? Do you believe that they know what they're doing? Do you believe that they will actually produce the results that they're projecting? So you can look into their history in terms of where did they work before, what is their track record, do I trust these people with my money?
Yeah.
Because it is your money.
Trust, and as Renee said, competence. That's what I look for personally. I want to know that the person is able to do what they're expected to do.
Absolutely.
All right. Okay. So let me do that. All right. So this is the 6-month financials. It was taken from this document here. The links for all these documents that we're sharing is in the description of the video. So feel free to look below for the links to everything that we're looking at here.
And also it's on the website that we just showed you.
Yeah.
On the investor information.
All right. So what I did was took all of these numbers, entered it into Excel. So let's just go straight to Excel. All right.
And it's important to note, guys, that these numbers are unaudited.
Yes.
So usually you'll get the unaudited figures, and then the audited figures will come out sometime after. So
yeah. So one of the things I never realized is that I thought, unaudited, no big deal. I'll just work with these numbers. But I heard a story recently of a company whose audited numbers varied differently from the unaudited. Unaudited, yeah.
Mm-hmm.
So you want to pay attention to those things. All right. Okay, so we're going to start with the balance sheet. So that's what we're looking at right now. So I actually had all the numbers entered from the previous periods, but we can't go through all of them right now. So I'm just going to focus on 6 months, right?
Right.
So that's what you're looking at here. And I started to go through it, and normally I would highlight the areas that I want to focus on. I didn't get to highlight everything. So that's what these highlights were for, but I didn't get to do that throughout the whole document. So, bear with me. So current assets, as at the end of 6 months, 883 million as compared to 312 million a year ago. And a big contributor to that is cash and receivables. So receivables would be money that is owed to the company. So normally on the general business perspective, it's normally on the current assets because you expect it to be paid within the year. This is a number for regular business that normally I'd watch to see how it's being managed, but unless they report that there's some issue or there's any bad debt or anything like that, normally it's just good to see the asset base growing. Due from related parties, this information maybe in the notes that would be doubled from where it was a year ago. And we saw where property, plant, and equipment would have increased. Makes sense because they would have, acquired new locations. All right. So in terms of total assets, that more than doubled from 531 million to 1.2 billion. So that's good to see. Share capital would have increased because they would have issued new shares. So that's what you're seeing here. Retained earnings would have grown as well, based on past performance from 6 months. Yeah. Thank you. All right. Next, we're looking at liabilities. So long-term loans have grown. So that's something that you want to pay attention to. We saw where the amount due to related parties would have been paid off from last year. That's good. Well, it's under current, so it's expected to have been paid within the year. So is everything that you're seeing here.
But also don't forget that a part of the reason for the IPO was to pay off debt.
Yeah.
So it is a good sign that we're actually seeing a difference within 6 months for what was due under their liabilities.
Yeah. And so we have payables here would have grown as well from 155 million to 503. Well, what we're doing is comparing the first 6 months in their last financial year to the first 6 months this year. All right. And overall, well, assets will have to equal liabilities and equity, so the numbers would match here. When we did the current ratio, we saw that both current and quick ratio is 1.7, and working capital is at 365 million for the latest period, and debt to equity is above 1. Payables, Georgette, is anything that the company owes. So it could be suppliers, insurance, anything like that that would have to be paid within the year. So,
right.
Yeah. All right. So next we have the income statement here. So in terms of revenue for the 6 months, would have been 4.3 billion as opposed to 2.8. That's a significant increase. And there are a few things to note here. This could be just simply, last year, this time, what were we dealing with, right? Lockdowns, restrictions, not as much movement. We don't have the same kind of, restriction anymore. We're still restricted to a sense, but not at the same level. So that does well for companies like Fesco, companies like Trans Jamaica, etc. Right?
Because people are traveling more.
People are traveling, yeah. Cost of sales, right? Every time you generate revenue, it has a cost. So cost of sales would be that. So gross profit is here. So though their cost of sales would have been higher, gross profit still ended higher as well. So from 93 million to 128. That's something to note. Operating profit went up. Net profit would have been almost doubled from 49 million to 97. So that's good. Earnings per share for the 6 months would have been 3 cents. That means for every share that is available, the company earned 3 cents, right? And that's something that you want to track over time. You want to see, with the 9-month statement, for example, how the EPS is growing. We also did some ratios on the income statement. So gross margin, gross profit margin, net profit, etc. Those are the numbers that you're seeing here. Because of the limited history that we have for Fesco, personally, I want to see these numbers over an extended period, right? So because Fesco is one of its kind on the market. Now, there are some brokers that include them in the retail industry, which you can do, but I look at it as one of one, which means I want to either, in a situation like this, I either look to an overseas company, see what that industry may do, see how some of the ratios may work out, and then maybe compare that. That may or may not be able to work because it may not be the same in internationally as it is locally, but you just want to have an idea of what the industry is capable of.
And the truth is there are benchmarks that are available, so you can compare it against a benchmark fuel retail company, fuel distribution and marketing company, and that would help you to see what their performance is against a benchmark, an international benchmark. Yeah,
agreed. And next we have return on equity, which is 15%, this year to date, and return on assets 8%. I didn't calculate price to earnings ratio, but we're going to look at that a little later. All right. And this now is the cash flow statement. So usually we look at 3 statements, and the reason why we look at the 3 financial statements, well, there are 4, but we don't look at all 4. We look at the balance sheet, income statement and cash flow statement. We want to see, lists of companies' assets and liabilities. We want to see, revenues and expenses. And we want to see, lastly, how they're managing their cash, right? So the first line you're seeing here would be the same net income figure from the income statement. And then there are some expenses that don't have a direct impact on cash. So those would be added back to net profit to kind of give you these first set of figures that you're seeing here. So, depreciation would have been added, etc. So we did a video on this explaining how the statements work. So that is in the description as well. Just look out for that, right? So, a few things to note here. Well, really, nothing to me seems, grossly exorbitant in terms of, figures. Again, I don't really have an extended period to track. Interest income would have been higher here. That's about it. But that to me is only 5 million. That's to me not something that is cause for concern. Foreign exchange gain would have been counted for here. And so we see they have here inventory adjustment, increase in receivables, tax recoverable in payables, etc. So what this is showing is all the cash that would have been provided by their operating activities. So 27 million a year before, 68 million now in the latest period. So that's what that's speaking to there. Income tax paid would have seen the difference from last year to now. And so net cash for operating activities, and that's what we're looking at from last year to now. All right, so next we have investing activities. This would be capital that would have been spent to invest in property, plant, and equipment, or proceeds of the sale of said property, plant, and equipment. So 135 million would have been invested in the purchase of PPE, and they would have gained 400,000 from that. Next we look at financing activities. So the issuing of shares would have brought in capital, long-term loans, and lease principal payments. That's roughly the same amount. And receivables would have gone from 1.5 to 11.4. And so the cash provided by financing activities, and this would be normal in terms of that drastic difference because of the fundraising that was brought on by the IPO this year.
Correct.
Right. So it is likely expected that you will see that cash being deployed in subsequent quarters. All right, and last we have really from here I'm just looking at cash at the end of the period. So we saw where they went from 81 million to 307 million. So all that cash that they would have raised from the IPO is there to be deployed. And then we have cash at bank, and then bank overdraft that would have been there. And unfortunately, I didn't get to do any ratios on the cash flow statement because I got the information this morning, as I said. All right.
Yes. So we see you, Chris. You said you see potential in them. So you bought some shares and you're going to buy more at the end of the month. That's excellent. Good plan. And I say a good plan because we believe in consistently investing.
Okay.
So
well, I was going to say just,
Yeah. So whatever asset, whatever stock you choose, we believe in being consistent.
In investing consistently. Yeah,
right.
Definitely. All right. So we're going to look at, so even though we just went through the numbers for the 6-month financials, I want to kind of go through the actual report for you so you can just see it. Normally what we do is read through that as well. So let me bring that up. All right. So we went through these numbers before and they would have shown the percentage growth here, which is good. So you can look out for that when you go through it on your own. So normally we look at the notes that accompany the statements. It's good to get a good snapshot of how the company would have done. So you can read through this, but we went through it already, so we're not going to do that here now.
Yeah.
And normally what I do is look at the look ahead or the
What's
outlook
to come.
or what's to come. All right. So it said that the Beechwood Avenue location was softly opened, as we mentioned before.
Listen,
and it
I
says,
love how these people market. Even the wording of their reports it's so well done. If you scroll back up a bit, you'll see it says softly and successfully opened. Okay,
Yeah.
so they're not leaving it to chance. It is important to note though that they opened on November 2nd.
Yeah.
Right.
So
Remember
that'd be last week.
Yes, and remember in the prospectus they would have indicated June or July or something like that for their launch. So they would have been delayed, and that would also impact the actual revenues that are coming in for 2021. So it would impact.
So you're
their
going to see the
projections.
impact for the Beechwood location revenue maybe in Q3 financials.
Correct.
Yeah. All right. So let's see what they're saying here. We believe that the pandemic will continue to affect our industry and business for the remainder of the financial year. Despite the ongoing challenges, we continue to adapt, persevere, and strive to achieve meaningful growth. Okay. All right. We like to look at top 10 shareholders as well. So as you see here, 82% of the total shares outstanding are within the top 10 shareholders. And that means that there's a lot more shares that can be provided later on, through some additional offer if some of these directors choose to do so. Well, some of those shareholders, not all of them are directors.
Right.
All right, and this, normally you look through this to see. It's nice to compare quarter to quarter to see how it what changes may be there. And the last page would be notes to the financial statement showing a breakdown of some of those expenses that would have been in the income statement.
Right.
All right. Okay. All right. So that's it for the 6-month financials. We're going to look at the price history now. If you have any questions as we're going, just post them in the comments and we'll get to them.
Yes.
All right. So this is my favorite part, right? Let me just say that.
And while Jermaine is pulling that up, I'll take the opportunity to say this. For persons who are not so much about the numbers and not so much about the figures, it's okay. You can take the time that you need to learn it, or you can find someone who does.
Are you doing a plug for a class? No,
No, I'm not.
That would make sense. So on that note, we do have a class coming up on December 4th. The link, there's a community link on our YouTube channel page. You can use that link to sign up for our investment class coming December 4th. So we go through, explaining the financial statements, explaining how to invest, etc.
It's the basics. So don't come. Let's just set the expectation here. Don't
do not discount the basics. That's all I'm saying.
Right. So don't come with the expectation that we're going to teach you trading analysis and that kind of thing. No, it's a basic introduction to investment, but it's an important introduction to investment. And at the end of it, you should feel more comfortable making your investment decisions if you're not comfortable doing so right now.
Yeah, definitely. All right. So this is the Jamaica Stock Exchange website. We're looking at the instrument summary for Fesco. Now from here, you can see all the companies listed on the Jamaica Stock Exchange. Once you click on it, it brings up this page and you see, all of this information here. Well, let me know if you can see it. Okay, if not, I can zoom in some more. Normally on this page, I look at the price to just, I try to get an understanding of how the price has moved. Now, Fesco hasn't been listed long, the IPO price was 80 cents, and we saw where it went from listing all the way up to, I believe, $3.45 in August. Now, one of the things that stood out to me here was the volume, right? 127 million units would have traded on August 23rd. So naturally, based on the volume of shares that would have been traded, that would have involved some directors, right? And we'll go to the news section to see if we would. So normally, when we see such high volumes, we're looking to see if any directors, traded in shares, or any director bought shares, etc. Right?
And so this is kind of the postpartum, right? So the postmortem. Sorry. So you're looking at it forensically after the fact. But what it also does, it helps you set a foundation and set your own expectation for what may come in the future.
Yeah.
So if you look at this and you see where directors may have sold some shares and the stock price went up, you say, okay, so is that a trend? Is that something that happens generally with stocks? And you can look at other stocks and see if it's something that happens normally. And those things help you to learn what to expect with the stock market. It helps you to learn the behavior of the stock market.
Yeah, it also helps you to understand the pattern for that specific stock as
Right.
well, right?
Right. And those things inform when you buy, when you sell.
Yeah, it could lead to potential opportunities in the future, right? Okay, so we saw when it went to a high earlier in August, it went back down to about $2. So, one of the things that we saw here, I mean, looking back in hindsight, that would have presented an opportunity for those who would be interested in buying. And since then, we've seen it trade, somewhere, well, after about a few days after that, maybe its lowest point would have been 235, and today 307. So between 235 and 307. So if it is that you saw an opportunity at 2, then you'd be, I mean, at least 50% if you bought at this low in September. Again, this is just us analyzing the information, not making a recommendation. All right. Next thing I like to look at is the candlestick chart, and I use this chart mainly for volume. So I try to look to see if there's increasing volumes in terms of purchasing, and that's what we see over the last month, right? It could be in anticipation of the report, which was released today. Who knows? But that's what we're seeing here. So if you go back, let's zoom out to 6 months, you'd have been able to see volumes from the start. We saw the max at August 23, which was 127 million, and we saw where the volumes were below a million during October, and then it would have started to pick up. So 2 million here, 2 million there, 4 million the other day, 3 million today. So I mean, I'd be watching that closely.
Yeah.
Next thing that we like to do here is just look at quarter to date, month to date numbers. Look at it would show the 52-week range here. It would show volume that would have been traded, and this is just a quick snapshot to give an idea of how the stock has been trading. All right. Normally we look at performance, but there's no information there based on the fact that the company is newly listed. Corporate actions, no dividends have been announced as yet, so there's nothing there. Price history is not going to be of much use to you. Latest news is where we're going to look at. All right. So we saw on October 1st that a director would have purchased shares. Again, those are the things we look for. Director has purchased 80,000 shares on September 30th. director purchased on September 28th. So we're seeing directors purchasing shares. Those are things we look for. Those are good signs that at least the directors are optimistic about the growth of the company. All right. And all I'm seeing are purchases, but I see a sale on September 6th of 1.7 million. And let's see if there are any other sales, mostly purchases, right? Here we go. So this would have explained that large volume that we saw. So a connected party sold 124 million shares, right?
Right. And these things will be in the news. They will be reported because they have to be. When a company is publicly listed, if you have a director or a connected party, meaning someone related to them or connected to them in some way, connected to the directors or the business in some way, selling or purchasing shares, it has to be declared publicly.
Yeah. The issue at times may be the timeliness of the announcement. So you may not see it right away, but you may see it, days or weeks later. These would be the statements that we looked at just now. So, just showing you to let you know that you can access it. The annual report, nothing there yet because they have not finished their first year on the stock exchange. And the audited financials, once those are available,
would be available there.
Yeah, exactly, Kai. Purchases would be a bullish indicator to me as well. All right, so that is all the information that we wanted to go through. So pretty much right now for the next few minutes, we're just gonna talk about some of the things we like, some of the things we're looking for, etc. So I know you really like the fact that it's a Jamaican-owned company.
Yes.
She loves to see marketing and branding, and those things appeal to her as an investor. For me, I'm looking at performance over consistent periods. So I don't get too high, don't get too low. I'm looking to see how the market is responding. I'm looking to see how they're managing their money, where they're investing, etc. So for me, it's still yes, thank you. Thank you.
Ratio.
So we're gonna take the PE ratio from VM Wealth Management.
Note the new logo, guys.
All right, so let me go here. All right, so I'm gonna zoom in. So I'm gonna share the link for this in the description. So there are two places that I normally look for the PE ratio. So the first is from a broker. So they may release a report. So this is VM's report. Let me zoom in. So this line here is Fesco. So I'm showing you it, then I'm gonna zoom into it, right? So this is Fesco, and their PE is actually 55. Now, as I said though, in this case for VM Wealth Management, they have them listed under the retail sector, right?
Right.
So retail is what they have them under. So they're comparing their PE with companies like CPJ, L.E.A.R.N Trading, eFresh, Indus Pharma, etc. Yeah. So the average PE is only 20, right? So I mean, within this range, Fesco would be high compared to these other companies. We see one here that's 84. Which one is this one? Which company is this one? Let's see. That's JetCon. And there are really no others that are that high. The next one would be 33. So with PE, the way that you want to look at PE is within context of the industry. Now, there are some persons who believe, Fesco is trading at a high PE. And you'd have seen on our Stocks to Watch video where Andre and Chike were talking about Fesco. So the PE would be high for them. What I say is that PE is not the only factor that you should look at, because if it's a growth stock, if it's projected to grow at an accelerated pace, then the PE is not going to be an issue, right?
Yeah.
So you want to use that as one of the factors, but not the only factors, all right? Yeah, so your two sources for PE would be, as I said, the broker. There's Mayberry that does their trade sheets as well, and it's pretty much the same information. But I'm just gonna verify real quick what Mayberry has as the PE as. So we're on Mayberry's site here. Their trade sheet. I think it has it at. It's 49 here, and that's probably because of the date that is being calculated. So this is at today's date, so it would have gone down since VM did theirs. This was
from the 8th,
released on the 8th. All right, so yes, as I said, so PE is one of the things to look at. If you make a decision solely on PE, you may be setting yourself up to not buy companies that present an opportunity for growth, or you may only buy companies that's perceived, that's shown as undervalued, and they're not moving because maybe other qualitative factors aren't working in that stock's favor. All right,
Absolutely.
So that's something you want to bear in mind. So we were saying that, I was saying that I'm looking for performance over maybe the first year. I want to see how they build. I want to see plans for the future coming to fruition. I want to see just how they continue to build. Yeah, exactly.
How they execute. So that is going to be important. Yes, I love the fact that they're Jamaican. I love the fact that they market well. So they have a clean look.
Companies that market well typically can manage sentiment well.
Right. Yeah. So there is that, and then I also find it important to see how the execution goes. Are you fulfilling what you said that you would have done? So in terms of going all in or getting bullish on the stock, the execution rate is going to matter to me as well. How are you really performing? Are you delivering on what you have promised us?
Yeah, agreed.
And that's why AGMs are important too, because that is when you have the opportunity to speak to the directors and speak to the executives and say, hey, you said you were going to do XYZ, and we're not seeing it. We have invested our money in your company because we believed you. We believed what you were about. We believed that you said that you were going to do what you said you were going to do, but we're not seeing it. And you have the opportunity as a shareholder to hold them accountable in that forum.
Yeah, agreed. So we're just gonna look through our comments here. We're about to wrap up. So agreed. As I said earlier with Kai, that from the price chart you can see pick up patterns or trends for the stock. We're talking about seeing directors purchase is definitely a bullish. It gives you a bullish sentiment. We spoke about PE.
Yes, I see Shay has two questions.
Yeah. How do we find info on stuff like waiting for the companies? When you say waiting, what do you mean? Can you explain that further? So when you say waiting, what do you mean? Right? So the sources for information would be resources like Mayberry trade sheet, VM Wealth does their broker report. All brokers do some form of report. The thing is, though, you're not able to determine when the report will be sent out.
Okay, so Shay says market weight versus overweight.
Okay,
so that's actually a part of the broker report as well from VM Wealth.
But let's see if they had.
They do. It's there. The extreme right column says whether it's underweight, market weight, or overweight.
Yes, thank you, Shay. All right, so let me go back to that screen. All right, so this is Fesco. Let's do this. So it says that Fesco is overweight. So I'm going to zoom in, and then we're going to show you what overweight means. All right, so they said it's overweight
for the reasons that we would have discussed before, the fact that it's being categorized in a particular way, right?
So overweight for VM means that the security is deemed to be undervalued and expected to outperform compared to the average market return, based on comparable securities within the same sector or industry with at least 10% price appreciation anticipated. So they would have been, anticipating an increase based on when this report would have come out. All right. Hopefully that answers the question.
All right.
Okay, so Nigel is asking, why is the price indicators not showing correctly for some stocks? If you're referring to the information on JC's site, I would just send them an email asking them about it or not. I mean, the site is controlled by the Jamaica Stock Exchange, so they would be responsible for the information. So it's either them or the companies that are submitting the information. We're not sure which. Palace is not one of the companies that we would have covered so far, so I haven't looked at that in a while. I agree, Shay. So it's unique. So that's why, even though you look at the report and you see it being compared in that way, just kind of take that, as I said, as one of the sources of information, because with a company like this, you really have to do a projection on where you think the industry is going. And that is the fuel industry, not necessarily retail.
Right.
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 Okay. All right. So final thoughts, comments before we close out?
So I think we've said all we have to say about Fesco for today. We do thank you for joining us. We encourage you to help others. If there are persons who who are interested in investing or to get started in investing, do encourage them to sign up for the Introduction to Investing class, which is on December 4th. The link is in the description.
Yep.
And also, if you're interested in getting your own Learn, Grow, Invest shirt to rep our community, then
the link is in the description.
The link is also there. So feel free also to join us on your favorite social media platform. We're on most of them.
We're on all of them. And be sure to tell us in the comments below the video which stock you'd want us to review next.
Right. So thanks everyone, and we'll see you in the next one.
All right.